Ryan at nzherald.co.nz. We'd love your feedback on this one this morning. Time to look ahead at what's going to happen with the markets this week, thanks to our partners Forsyth Barr. And Zoe Wallis, investment strategist for Forsyth Barr, is with me this morning for a look ahead. Zoe, good morning.
Good morning, Ryan.
Good to have you on the program. So we are, of course, all looking ahead to first quarter GDP on Thursday. We will find out what's going on there. What are you, like most others, picking a 0.7?
Yes, I think there's a clear consensus forming around that 0.7% Q-on-Q view. That would be higher than the Reserve Bank was picking at 0.4 and follows a pretty decent quartering at the end of last year. So that would be a pretty nice sign that we are heading in the right direction and sort of putting the last 2 years of pretty recessionary, pretty tough environment behind us. I would say it's probably not all clear sailing from here, though. There's still some sectors of the economy that are doing a lot better than others for now.
What do you think it could mean for, we mentioned this earlier with Garth, but what could this mean for our OCR cuts that we are expecting, not guaranteed, but expecting?
Yeah, exactly. Look, I mean, the Reserve Bank, when it cut down to 3.25%, said it's not a done deal, that further rate cuts will be forthcoming in, subsequent meetings. So I think if we do see a pretty solid GDP number combined with some of the nascent inflationary pressures that we're starting to see come through, particularly if oil prices stay up where they have jumped to over the weekend, then it's definitely option for a pause in July. I still think we're looking at further rate cuts towards 3%, if not below that, in coming months, however.
Okay. What else do you think, what further do you think will happen with oil prices off the back of what's happening in Iran?
Yeah, look, we obviously saw a pretty notable reaction to what the Iran-Israel conflict, particularly playing out in oil markets, as does happen with conflicts in the Middle East generally. We've seen in recent years that's very much the key channel that story plays out through for financial markets. We've got, Brent crude trading at around 74, almost 75 this morning. I think that really depends on where the path heads from here in terms of the level of conflict, whether or not the US gets involved, whether Iran looks at doing something with the Strait of Hormuz. That will all have quite a big impact on just how much oil prices could climb further. Obviously, for New Zealand, that plays out for us through our petrol prices and at the pump. So we'll be keeping a really close eye on how that evolves in coming weeks. But, it's very much a moving feast, and it's pretty difficult to predict exactly how this type of conflict will continue in coming days and weeks.
Yeah, because China buys most, or if not all, of their oil, doesn't it, for the most part? What about the inflation data we had out of the United States, and it was a lot softer than forecast? Does that mean that when the Fed meets this week, we are finally maybe going to, as Trump hopes, see a cut? What do you reckon?
Highly unlikely at the moment. The clear indication from the Fed is that they're pretty happy to wait and see how things play out. What we saw in that recent inflation data is that there aren't too significant signs of how tariffs are playing through as yet. And other parts of the economy, for example, the services sector, are seeing weaker prices. But what happens usually is companies stockpile, and particularly because this tariff change was quite clearly signalled, a lot of firms stockpiled goods in advance of that. So they're still being able to sell those goods at the cheaper price that they got them in the country for. What we expect is that will still continue to play out in terms of those tariff prices coming through and feeding through to higher price levels in the US economy over coming months. And I think the Fed really wants to see just how much inflationary pressure is going to come through before they feel comfortable starting to cut interest rates from here.
All right, Zoe, appreciate your time this morning. Thanks so much for coming on the show. Zoe Wallis, investment strategist with us for this week's Market Outlook. And that is thanks to our partners, Forsyth Barr.